Hi there, you're watching Your Trades on ET Now, and with me I have Priyanka Uppal, I'm Shreyansi Singh, and over the next half an hour we'll take you through the day in trade. And what a day it's been, right Priyanka?
Bouts of volatility, Shreyansi, I must say. But then typically the way markets should behave on an expiry day, that's what the moves we saw. We saw the sharp. It was a good opening on this on the back of the strong global cues, but then gradually we started slipping in, and then later, past one, in fact, we should say that markets starting to pick up. One very clear trend, which was it was anticipated that maybe the Indian IT companies, which probably derive the revenues from the US, could influence the market trends today, and that was a clear thing because softer than anticipated US inflation figures came in, and that's exactly what happened in IT trade today. IT being the top gainer today, smart recovery. We saw the standout gains coming in again from capital goods space, consumer durable names, and of course there was a lot of earning upbeat, which was one reason that we've been seeing stocks like Siemens, ABB, Thermex gaining higher levels, and of course a lot of brokerage notes coming in. But then clearly the standout gainers were IT pack today. Broader market also did healthy gains today, more than 1%. But the kind of moves which is again and again coming in from capital goods space, consumer durable names, but the IT really surprised. And because if you remember, Shreyansi, 2 days back when Fed official Jeremy Powell mentioned that month on month you could see a decline in inflation, and that the biggest beneficiary would be the growth stocks, and hence the move was seen today in IT pack. But a lot of earnings number.
Absolutely, and speaking of the IT rub-off, right, you're seeing a little bit of that on Tech Mahindra as well. But then in terms of earnings, of course, you've got a whole host of counters. You've got M&M, and you've also got, so now talking about M&M first, of course, it was a strong quarter for M&M. When you look at the scorecard coming in, the revenue was in line with estimates, the margin and profit also beat estimates as well. So a strong quarter coming in for M&M. But when you look at Bharti Airtel, then brokerages have been quite bullish on the counter. And when you look at how many brokerages have come out with no's, at least 14 brokerages out of 25 raised their price targets on the stock. And in fact, the commentary coming in from Bharti Airtel also is very important, because the kind of commentary that you've seen, they've been talking about how India's telecom industry also needs tariff hikes and peak capex for the company is over. So good commentary coming in for Bharti Airtel as well. And when you take a look at Mankind Pharma as well, the strong Q4 still failed to impress D Street a little bit. And when you look at Mankind Pharma, you did see those losses coming in despite that strong set of earnings, strong set of commentary also coming in from the management. They're bullish on export growth, they're bullish on growth in general. So when you look at Mankind Pharma, you did see a little bit of sluggishness there for Mankind Pharma. But despite that, when you look at the other counters, you do see a little bit of an upside coming in for Bharti Airtel as well as Tech Mahindra. That being said, of course, there's LTI, Mindtree, Infosys, Titan as well as JSW Steel that remain in focus, and JSW Steel will be a counter that we will also keep an eye on tomorrow as well, because their earnings are definitely on the radar for the market.
And of course, not to mention about HAL, the kind of move post the numbers, the stocks, and of course we've seen a trend which is gaining momentum time and again is the PSU stocks, and of course numbers, earnings upbeat will of course buck the trend from here. But then an exclusive which we break, and did you notice, Shreyansi, that we were at day's low, but Inox Group, Inox Wind, Inox Energy, both the stocks were at day's high. In fact, Inox Wind was 7.5% up. Inox GFL Group is, we've learned from sources that they're set to launch a renewable platforms along with clutch of PE investors, and this renewable platform would provide turnkey solution not just to the group companies but also to the third-party corporates also. And a lot of marquee foreign names which are likely to pick up the stakes, like AP Moller Capital, which is part of the Danish shipping giant, I Squared Capital, Actis, and a lot of other funds from Singapore which are interested in pick up the stake. And then foreign investors could pick up 51% stake, and Jain, the promoter group, will retain 49% of the JV, and the consortium is being advised by ENY. The potential figures are very lucrative, Shreyansi. 10,000 to 12,000 crore worth of additional revenues can be generated for Inox Wind from this platform. And since we know that Inox Green, which undertakes the operational and the maintenance work for the group, there can be 150 to 200 crore of revenue coming in, yearly revenue coming in from Inox Green. So that is the reason that when we saw that the markets were at day low, both the stocks were still trading higher. So this was one exclusive, that the entire group which is to be which was in focus today. But this is a long story because this platform will be launched in another 3 to 6 months, and the revenues could be generated. The figures we've mentioned can be spanned over next 3 to 4 years. But now, what next lies ahead in terms of technical levels? Expiry done. Kunal Bothra joins in from the studio. Kunal, good afternoon. Since we saw it was it was a swing day trade for both the kind of traders, bears as well as bull. But then finally, bull got the grip in their hand. Now, what are we? Are we trading higher from here also? How do you make the levels? What do you make of the markets from here?
So I have this very classic quote: the deeper the valleys, the stronger the rallies.
Okay.
For the index, and deeper was the intraday correction for the index today, and that's why you saw the markets getting into almost like a V-shaped recovery or a bounce. Yes, of course, I think major part of this intraday volatility was because of the way the expiry for the weekly expiry for the index was. But I believe that the stronger part of the recovery for the markets in the second half was when the India VIX started to show signs of cool off. I think on closing basis, at least on the LTP basis, we managed to come back sub the 20 levels for India VIX. Now, this could be a big confidence booster for the markets that hopefully if the next couple of days we see that kind of a same trend for the India VIX, where we cool off to say 19 or sub 19 mark, we could see a much more stronger and a continuation move for the index. So I think we finally managed to break out for the index, and that lull and the sideways consolidation which we were going through in the last 1 or 2 days, even after a mild pickup, I think could now lead into a direction as well as a trend.
Absolutely. So that's the verdict coming in when you look at the sectoral and when you look at the indices in general. But Kunal, tell us about what you're looking at in terms of where you see value emerging sectorally as well.
So sectorally, I believe that now it should be a mix of those large cap stocks, underperforming names like IT, the financial services index, banking stocks. They can make a very strong comeback from here on. So I strongly believe that from here on, you have to play for a short-term, medium-term trader. You have to play with all of these momentum stocks as well as the underperforming stocks, which could make a very strong comeback. Now, the two stocks which I would want to highlight at current levels, one is Axis Bank. Now, the stock which has corrected from, I think, 1190 mark towards 1100, 1120 levels, that's something which is looking attractive. Would suggest a buy in Axis Bank with a potential near-term target back towards that 1200 levels, and stop loss could be kept at 1118 mark. And the second is a buy in Ircon. Now, railway stocks are also making a very strong comeback, and I believe that there's been excellent volume potential for many of these stocks which you've seen today. So expecting a buy and further up move for Ircon, suggesting a buy with a target of 275, stop loss at 250.
All right, interesting. Railway counter has also been trading higher. Ircon happens to be on your radar. Thanks very much, Kunal. We'll let you go on this. Let's go further. Let's get you the word from the wise. Mahesh Patil, CIO, Aditya Birla Sun Life AMC, discusses the sectors he is bullish on going further ahead. Listen into what he exactly says, what is he picking at the moment, and what is his rationale looking like.
We have overweight on the automobile sector, especially the two-wheelers and the four-wheeler space. We are underweight the commercial vehicle. We think the auto sector is still, while the growth rate will moderate down in this fiscal year, especially for the four-wheelers. But overall, the outlook on margin front is steady. We're seeing premiumization happening, so that should drive a better top line growth. So that's the sector where we are overweight. We are also overweight in the telecom space because we think that this is a sector which a good defensive and post-elections, there are good chances that you will see tariff increases, which has been long overdue. And that should drive better EBITDA growth for the sector. And we are positive on the industrials, especially the capital goods sector, which is actually had a fantastic run. But I think the outlook there from a, say, medium next 2, 3, 4 years looks fairly strong. So we continue to hold on to it, though the valuations there are above our comfort zone. And then sectors like pharma, for example, where even the US generics market is now showing signs of improvement. We are seeing the pricing pressure, which was there, is now eased off.
All right, then that's the word coming in from Mahesh Patil, CIO at Aditya Birla Sun Life AMC. But tell you what, let's take a quick break right here. And then when we come back, we'll take a look at how the derivatives roundup is shaping up like.
Welcome back. You're watching Your Trades, and now a check on the derivative side. The trend completely changed since yesterday. Though there was a momentary fight only which appeared between bears and bulls. If you noticed the levels yesterday and the strikes at which the maximum open interest in terms of call writing was there, the trend looks changed now. Nifty, there's a long built-up trend. Yesterday it was flat. Bank Nifty, there was a mild short built-up, but then here the trend looks like now long built-up. 22,300. Above that, there was a possibility of a sharp short covering rally, and that's what we saw also. And now this is the action which we can capture in the call buying action strikes also. 22,500, 22,600 got the maximum of the call buying here, and now support has also risen. Support happens to be now 22,200 and 22,300 because the maximum of the put writing happens at these strikes. So clearly Shriyansi in the grip of the bulls, same as what the color you're wearing today.
Absolutely, and I guess I really called it, right? Because that's the kind of trade that we've seen today as well. But let's get a move on then and take a look at one specific counter, our big story of the day, Mankind Pharma. It was an inline set for Mankind Pharma. It was strong growth led by exports as well as higher gross margins that expanded by 260 basis points year on year, aided by that favorable change in inventories and stock and trade. And when you take a look at the export revenue also, that also soared year on year. But it was the management commentary that was very important because they did talk about expecting growth of mid-teens in the export business as well. In fact, Srishti is joining in with the latest from Mankind Pharma's con call.
Well, yes, recently a lot of these analysts were actually looking out for to have an answer that why such a significant fundraise of rupees 7,500 crores is what the company is looking at. So the company did say that the news related around the Bharat Serum acquisition is just a market speculation for now, but they want to keep a war chest ready for the acquisition, if any. For now, they are evaluating is what they have actually gone ahead and specified, that they are evaluating opportunities in the high entry barrier segment and especially related to the chronic segment. This 7,500 crores fundraise is an enabling resolution to not to over leverage their balance sheet in the times ahead, if at all they go ahead with any sort of an acquisition. All in all, that is the clarification that the management has come out with. But apart from that, the company has a good balance sheet or net cash in their balance sheet as well, where they did say that the net cash position stands at 3,260 crores as of March 31st. Apart from that, when it comes to their outlook on some of the other division, then India business is doing well. They expect to continue to outperform the IPM by 1.3 to 1.4 times. International division is also one of their key focuses, and they have come out with their EBITDA margin guidance of 25 to 26% for FY25, which we see that is maintaining to the levels of FY24 as well. So all in all, a good management commentary. Apart from that, a clarification coming in from the management as well on the fundraise plan.
All right, thanks Srishti for that roundup coming in on Mankind Pharma. But let's delve a little deeper into what really happened, because we've seen quite the move coming in for Mankind Pharma. There's a little bit of uncertainty around that acquisition, so let's also go across and listen to what the management had to say there.
The news has come with just a market speculation. The same we have cleared to SEBI also yesterday by giving a letter, and by saying that we doesn't mean that we are not exploring opportunities in market for merger and acquisition. We will definitely looking for the acquisition, but when the right time and right opportunity will come, definitely we'll go for it. Right now, it's just a speculation in the market.
Okay, now that's all with the Mankind Pharma, but then move ahead. Let's move ahead. In terms of earning, there were many other stocks which were buzzing today. In fact, a couple of stocks, and we spoke to the management also. We spoke to Keystone Realtors, NLC, Redington India on their performance and their FY25 outlook. Let's get you the reactions in a combined way.
We wish to grow into the SOBO market, where we believe there will be a resurgence of residential development, because for a very long time, there has not been too much of development taking place in those markets. And towards that, our teams have been working really hard. We are also very happy to state that there were 6 projects launched last year against a guidance of only 4. That was we guided 1 per quarter. We've guided 6. We've done 6. This year, our guidance is for 2 projects per quarter, and we're looking at exceeding that as well for the year. Keystone Realtors has from the very initial stages done JDs with landowners as well as with real estate developers. And so far, we've been extremely successful. We've had a long history of partnerships, and we plan to continue to grow that.
3 units of Ghatampur, they are in the advanced stage of for declaring COD. Unit number 1 already the oil synchronization was done, and we are going to declare the COD of unit number 1 shortly within one and a half month time. Unit number 1 and unit number 2 in the month of September end, and unit number 3 in the current financial year, later part of the current financial year. And once we commission all these 3 units, is expected to add around 500 crores to our PAT.
Our loan book has not grown. We were expecting about 8% growth, 8 to 10% growth. We have grown by only about 4%. Yes, I agree. This is the only area of concern. Our disbursements have grown by almost 15%. So Q4 we have, I would say, reached levels where we should have grown all through the year. But because of the factors of technology shift and also restructuring, we were slightly weighed down in the first 2 quarters. So yes, it has been muted. It is slightly concerning, and this is going to be the major area of focus for the company in the current financial year. We have worked very hard on our asset quality. Yes, this was one gray area for the company with a very high EAD, stage 3 EAD of almost 4.37% last year when we started off. We went in the year at 3.31. Means we brought it down by 1.03%, 103 basis points. Yes, it has been good. I would say it has been good, but I think going forward, we expect a lot of the hard work we put in last year to fructify.
That was the word coming in from Keystone Realtors, NLC as well as LIC Housing. But let's get a move on then and take a look at JSW Steel, because that is all set to report its Q4 earnings. And they're going to be hopefully reporting a strong volume growth coming in. And there's also the impact of high iron ore prices that's also in the spotlight. Ashesha is standing by to get us what exactly the street is penciling in. Ashesha?
Well, yes, we are expecting mixed set of numbers from JSW Steel this time. Volume growth is expected to be very strong. About 8 to 10% volume growth is what we are expecting on a sequential basis. But higher raw material costs and lower steel prices are expected to impact spreads of JSW Steel. Realizations are expected to decline about 2 to 4% on a sequential basis. And both coking coal and iron ore prices were on the higher side, because of which EBITDA per ton is expected to decline by as much as 25 to 30% on a sequential basis. We are expecting revenues at about 44,400 crores, which will be an increase of 6% on a sequential basis, and margins are expected to contract to 13% versus 17.1% that the company had reported in the previous quarter. Management commentary with respect to guidance for FY25 for volume, sales and production will be crucial. Apart from that, management commentary on capex and capex timeline going forward and debt reduction plans will also be keenly awaited. But all in all, muted set of numbers expected. Volumes are expected to be strong, but EBITDA per ton is expected to see a sharp drop on a sequential basis.
All right. Thanks very much, Shisha, for that glute. Well, that's all in this edition of Your Trades. But when we come back, we have more to follow on. Look at least the global data. In terms of global data, we have China's industrial production. That will be key to watch out for. And of course, whole gamut of earnings which has to come from the mid-cap and the broader markets. Till then, stay tuned. Keep watching ET Now. We see you tomorrow. Bye-bye.
If you like this video, then like, share and subscribe to ET Now.